Holy smokes, guys. The stock market is crashing right now. The VIX is up 11% after we got the jobs data that we have to break down in this video. So run the likes up, make sure to subscribe. We have a lot to go over: the jobs data, stocks, the indexes. So again, hit that like button, subscribe, and don't forget to get up to 15 stocks from Moomoo, which is completely free money. All you guys have to do is open up your account and fund it with at least $100, which then you can take it out if you don't like the platform, and you get up to 15 stocks, and your uninvested cash will earn up to 8.1% APY. That's linked down below, or go to stocksurfest.com/Moomoo, and let's dive right into the video. So it's currently about 1 p.m. on the East Coast, and all of the indexes are falling, with the NASDAQ taking the biggest beating, down 2.2%, with the Russell down 1.4%. and the S&P down 1.4, and the Dow's actually not looking that bad, but still it's down 0.75%, and the VIX is up 10 to 11%. And talk about a clear double top on SPY here. You guys can see we hit $565 per share in the middle of July, and we tried breaking out of that point all of the end of August and in early September here a couple of days ago, and clearly we failed, right? Again, double top is in clear full effect on SPY. You guys see the first top right there and the second one right here, and I believe it's the same on Triple Q. Let me pull this up and show you guys. Actually, no, I'm thinking of something else here. Not the same on Triple Q, but clearly this thing is collapsing, right? We hit 505. Sold down to about, 425. Then we rallied all the way to 485. But obviously we hit a higher low right there, and we're downtrending yet again in the very short term. Obviously, all the time I say, when in doubt, zoom out. When you zoom out, we're obviously still uptrending, but in the very short term here, we're trading in this downwards channel on Triple Q, and it looks like more downside could be right around the corner, which for me, I'm like, heck yeah, bring it on. I'm rubbing my hands together. Let's freaking go, baby. I'm down to buy more stocks at cheaper prices, ETF stocks, you name it. But in the short term, can't lie, it does look pretty ugly right now in the short term, right? So let me actually pop up the Safari tab very quickly. We'll go through what in the world is going on. So we got the August jobs report today. Let me actually make my face a bit smaller so we can focus on what's important for this video. Obviously, it's not my face, right? So we can see here, August jobs report, unemployment rate falls to 4.2%, which is good. We saw a crazy spike in the unemployment rate. I believe that was last month, right? So that came down, but the labor market only added 142,000 jobs, which was weaker than expected. In other words, the economy, guys, it's not looking too strong as of right now. So we can see data from the Bureau of Labor Statistics released today on Friday showed the labor market added 142,000 jobs, non-farm payroll jobs in August, which was fewer than the 165,000 expected by economists. Meanwhile, the unemployment rate, like we said, fell to 4.2% from 4.3% in July, and August job additions came in higher than the revised 89,000 added in July, but still, the fact that it missed that estimate is causing an overall panic in the markets. Again, people are like, oh my God, is the economy weakening, recession, this, that? What's Powell going to do? Are we going to get even more rate cuts at this point? Maybe a 50 basis point cut to start things off. A lot is going on, and the key word here is uncertainty. There's a lot of uncertainty right now, and what does the stock market hate? It's that U word. It's uncertainty, man. The stock market absolutely hates that, and to be honest, this is what the Fed, Powell, this is what they've been waiting for. They're not going to go out and say it. I guess they've been hinting at it, whatever, but They've wanted the jobs market to weaken. They wanted unemployment rate to go up, the unemployment rate to go up, because this gives them the go on cutting rates. So then, hopefully, that can stimulate the economy again. More jobs will be added. Unemployment rate will come down. That's kind of the idea here, right? That's kind of the idea, what the Fed has been waiting for. And we've covered this time and time again on the YouTube channel, guys, which, by the way, make sure to subscribe. I think 50% of you guys are not subscribed. So if that's you, make sure to subscribe. And I challenge you, at least 100 likes on this video. Run the likes up. I appreciate you all for tuning in as always. And by the way, mailing list, free. It's linked down below. I send my top 3 stocks every week right to your inbox. Go check it out. But yeah, coming down here a little bit more, looks like wage growth, which is an important measure for gauging inflation pressures, rose to 3.8% year over year, up from a 3.6% annual gain in July. And on a monthly basis, wages increased 0.4%, higher than the 0.2% seen in the month prior, which is not bad. But still, I mean, is that keeping up with inflation? Is it really? Probably not, guys. I mean, if you trust what the CPI is, I don't know what to tell you, man. If you go to Trueflation, that's a better idea of what inflation actually got up to. I think Trueflation had it at, 18% at the peak or something like that. Now it's come down a lot, obviously, but still, that wage growth is not keeping up with inflation. Not by a long shot, right? So that's what's causing the mass drop in the stock market right now. And we'll cover some stocks quickly in this video, but we'll break down other big ones probably in other videos later on today. But we do have some big names like Nvidia. Yeah, you heard of Nvidia. This one's falling down close to $100 per share. Now it's at 102. We might get that drop under 100 on Nvidia. Pretty much every big tech name is getting absolutely fleeced today, guys. Google's down 3.5%, taking out the lows from a couple weeks ago. Now we're at a fresh multi-month low on Google. Stocks like Microsoft are getting hammered, down 1.5%. Well, I guess that's not hammered, but it is a decent red day for the biggest companies out there in the world. Meta's down 3.3%. Companies like JP Morgan, 2% in the red. CrowdStrike, another position of mine, is down over 4% on the day. CRWD, now it's back towards where I bought initially, around 230, 235. Now we're at 245. So CrowdStrike is coming down closer to my buy range. I'm excited about it. So for me, guys, obviously, I'm not panicking. Obviously, I've been through the rodeo. I've seen this happen many times. I'm looking at this as a buying opportunity. And at the top of my watch list, my buying short list, if you will, we have VTI always, which is an overall U.S. stock market ETF. I'm always buying that pretty much every week, so I'm looking to buy more of that. Nvidia, of course, we have that. CrowdStrike, you guys see right here. Google and Amazon. If I had to dial it down to 5 that I'm buying now, those are it. Let me say it again. VTI, Nvidia, Google, Amazon, and CrowdStrike. Those are my top 5 that I'm buying at this moment in time. And we'll see. That could change as stocks continue to fluctuate, as again, these are volatile times. But for now, that's personally what I'm focusing on. And I'm excited, as you know, as you should be as well. You know, if you're looking to buy stocks and if you have a long-term perspective, if you're in this for the next week or two, I don't know what to tell you, man. Anything could happen. But if you're in this for 5, 10 plus years, you should be golden, and you should view any 10, 15, 20% drop in the overall stock market as a gift, as a buying opportunity, right? So let me know your thoughts in the comments down below, guys. Run the likes up, and do not forget to get up to 15 stocks from Moomoo with at least a $100 deposit. Use that link down below, or go to StockSurfS.com/Moomoo, and your uninvested cash for now will earn up to 8.1% APY, which, come on, guys, that's unheard of. That's a no-brainer. So again, use that link. And with that being said, I'll catch you guys in the next video.